You're watching Reality Check, where we attempt to decode the road ahead for India's COVID-hit economy. The overall forecast remains almost uniformly grim. Infosys founder N. Narayan Murthy recently saying that India might be headed for the lowest growth since 1947. But under the overarching and depressing growth forecast, are there any glimmerings of hope as the economy unlocks down? Now, just the overall big picture on growth, of course, remains grim. The RBI has expected growth to be negative. World Bank is forecasting minus 3.2%, IMF minus 4.5%, ICRA minus 9.5%. So that's the sweep of the forecast, indicating that frankly no one really has a very clear idea. It's just that it doesn't look very good. Now, if you lift the lid and look at the individual data points within certain sectors and certain specific areas of the economy, let's go through what those are telling us. Now, manufacturing has dropped anywhere between 40 to 70% during the lockdown. The growth in manufacturing was at April 2020 down 67%. In May 2020, it has improved somewhat. It's down 40%. So that is still a significant percentage, though it appears to be getting a little better. Now, as far as credit goes, there's been a number of fairly generous credit schemes, guarantee schemes announced by the government, but the rate of growth of bank credit is still falling. The rate of growth of bank credit is still falling. In July 2019, it was 12%. The rate of growth of bank credit in July 2020 is just 6%. Also, consumer spending, which was already in trouble even before the COVID pandemic hit India, has further collapsed. In fact, the RBI survey of July 2020 says that consumer confidence is at an all-time low. This is an RBI index. In July 2019, it was at 96, falling steadily all the way now to July 2020, where it is down to just about 54. These are all rounded off numbers. So is there any saving grace, or are there any saving graces? Now, agriculture. Despite the coronavirus, grain production is actually expected to rise this year by 1%. In 2019-20, 296 million tons was the output. In 2020-21, 298 million tons is the target. So that's a bit of good news, except the 1% increase in itself may not be a major achievement. Previous years have seen bigger jumps. Food grain has jumped in 2016-17, for example, by 9%, 4% the year after that, 4% again in 19-20, and just 1% this year. The other little glimmer of hope has come from car sales. As the lockdown has eased, car sales have somewhat improved. May versus June of 2020 has seen a 350% jump of vehicle registrations. But according to the Society of Indian Automobile Manufacturers, sales are 75% lower than the last year, April-June quarter of 2019 versus 20. There's actually a 75% drop. And finally, the general consensus is that the government, for all the much hyped packages, has not spent enough. And that's one way of getting out of this logjam. But can it afford to? Because overall revenue has been falling 90% less than last year. So the government has set higher targets to spending, but the collection has dropped. The 2019-20 budget target was 19.8 lakh crores. Until June 2019, 2.8 lakh crore or 14% of the target had been collected. 2020-21 budget had a target of 20.2 lakh crore, but only 1.5 lakh crore or about 7.5% of the target has been collected. Also, of course, while the government is earning less, it is spending more. So as revenue drops 90%, spending is up 13 or 13%. Total spent till June 2019 was 7.2 lakh crore. Spent till June 2020 is already up just over 8 lakh crore, even though, as we said, earnings are down. All right, joining us tonight on Reality Check, we have with us Nilesh Shah, who's a part-time member of the Prime Minister's Economic Advisory Council. He's also Managing Director, Kotak Mahindra Assets Management Co. Limited. Mahesh Vyas, Managing Director of the Centre for Monitoring Indian Economy. Praveen Chakravarty of the Congress, Chairperson, Technology and Data Cell, and also Yamini Iyer, President of the think tank CPR, Center for Policy Research. Great to have all of you. Let me just start with you, Nilesh Shah, that and there are so many data points that one can look at, so do feel free to go beyond what we put out. But overall, when you look at the state of the economy, despite the fact that there is some unlocking going on, are you deeply worried?
Undoubtedly, from an FY21 point of view, we are looking at negative GDP growth for the first time after 1980. Of course, there are some bright spots like rural economy, like agriculture, like current account surplus. And one can debate whether current account surplus in today's context is positive or not. But still, it is current account surplus. And obviously, the monsoon.
Right.
However, there are many challenges in urban India, small and medium enterprises, employment. Clearly, as a country, we have to convert this COVID-19 as an opportunity.
Right.
Like we converted 1991 crisis through liberalization and opening up of economy.
Okay, but before we come to that, before we go all the way to now thinking of it as an opportunity, because right now we're literally going from month to month, week to week of a fairly grim kind of outlook. Why do you think that the government's various attempts at trying to kickstart the economy, various packages and schemes, why do you think they've not really worked?
It will be unfair to say they haven't worked because we are facing a perfect storm where a medical crisis, economic crisis and financial crisis is coming together. We saw today UK economy plummeting 20% in Q1. US economy was down more than 30%. So every country in the world is going through crisis and there is no short-term solution.
Okay.
We'll have to first tackle the medical problem through medical solution.
Right.
And then only your packages will produce desired economic result.
Okay. Mahesh Vyas, do you agree with that? And also, let me ask you in a sense the same question, that the government has announced or rolled out a whole lot of measures, most of which seem to be oriented towards making credit flows easier or cheaper to companies and so on and so forth. Based on your own research and the surveys that CMI does, are you seeing any improvement, any shifts in how corporates are spending, investing, any of that?
Well, the corporate data has for a long time been very depressing. Companies are not investing. The last financial statement database that we could put together is for the year 18-19, and even in that, we saw investments in net fixed assets to be the lowest in the last 30 years.
Right.
So growth in net fixed assets in nominal terms was only around 4.5% growth year on year in nominal terms, which means in real terms there was a decline. This has never been so bad in the past 30 years. And if you look at the investments, particularly in plant and machinery, it is even worse. It's around 2.5% or so. So companies were not investing till 18-19. So 19-20 was obviously a more difficult year. If you look at the quarterly results of the year 19-20, each of the quarters has been negative compared to a year ago if you adjust for inflation, top line growth. If you look at value added, it's negative compared to year-on-year growth for all the 4 quarters. So if 18-19 they did not invest, and then 19-20 if the top-line growth has been negative year-on-year for 4 consecutive quarters, then obviously corporates are not going to invest.
Gosh. Praveen Chakravarty, now as Nilesh Shah was saying that you can't really fault the government, you still have to come out of this kind of COVID maze where we are, where you're having kind of these lurching from lockdown to unlockdown and then locking down again. Is that, you think, an acceptable argument to make?
Yeah, first I want to start by saying that you, I think, rolled out about a dozen data points and numbers. And I would actually urge everyone to look at one particular data point that you mentioned, which I think is the most critical one, which is the RBI's Consumer Confidence Index.
Right.
This was exactly the argument that Dr. Manmohan Singh, the former Prime Minister, and I wrote in an article in the Hindu on the 3rd of August. This was before RBI's numbers came out. And our piece was titled, Rebuild India's Confidence That Will Revive India's Economy. And the reason we say that is, we must understand that the crisis that we have right now is actually, first and foremost, a humanitarian crisis. Unlike the previous economic crisis, which were macroeconomic or financial in nature, this is a humanitarian crisis. So what has it done? It has dented confidence of people. It has dented confidence of businesses. It has dented confidence of banks to lend. It has dented confidence of multilateral organizations. And we argue that let's rebuild confidence. And how do we do that? You can do that through a set of fiscal tools. Now, how do you build confidence in people? You give them money. A direct cash transfer of a significant amount would inject confidence into people and alleviate some of the insecurities they feel. This would also lead to demand in the economy, as economists call it. Second,
Praveen.
Yeah.
Sorry. Yes, again, and I'll request all of you, you're a very, very eminent and high-powered panel, so let's try and keep our responses as jargon-free and simple as possible so the ordinary viewer can understand. But essentially, Praveen, reading the pieces that you've written and also co-authored with Dr. Singh, I see where you're going with this, that you're saying that apart from confidence, you're also talking of just infusing more cash into the economy, specifically making more generous contributions to people, cash transfers and whatnot, much more than what the government has done. But that calls for more spending. And as some of the data suggests, the government is actually very, very cash-strapped. They were already cash-strapped before the pandemic, and now even more so. So where's the money going to come from for this?
Sure. And we answer that in the piece. Surely, first and foremost, I think we argue that this will call for more financial resources, but the only answer is borrowing. We will have to borrow more. Every country in the world is borrowing more, and there is simply no way out of this. Now, of course, there are two big concerns that the government seems to have when it comes to putting money in the hands of people. One, if we borrow more, what will happen to our ratings? Will we be downgraded to a junk rating, as the rating agencies call it? Second, if we give money to people, will they come back to work when industry needs them? And I think both of these arguments can be handled. Actually, they are not, they're not the fears that the government has made them out to be. And for rating agencies, we must tell them that we will grow the economy with this borrowing.
Okay.
Yeah.
Fair. Okay. All right. Fair enough. Yamini Iyer, you think that is that really the only way? Because there are, frankly, I guess, just two options. You either borrow or you print cash, and so you have to take that call.
So let me add a third option. I do agree in the larger scheme of things, borrowing is going to be necessary, but there is an interim solution. And that interim solution lies actually within the capacity of the government. And that's about expenditure reform. We know that the government of India and state governments are extremely inefficient. One consequence of that inefficiency is that we actually have a large amount of unspent money lying around, floating all around the country in bank accounts. The CAG has repeatedly pointed this out. I think it's about to the tune of 1.75 lakh crores or some such. It's there. It's significant. It can help us tide over. It requires doing a little bit of hard work on expenditure management reform.
Right.
IT enables that. I think it's possible if we put our minds and will to it.
Okay.
Also, there are a large number of clunky schemes, over 400. Reforming those with a little bit more of work around expenditure and budgeting can help open up. The second thing, I just wanted to add one more point to what's already been said. There is absolutely no question that we need to to do a lot more on the demand side.
Yes.
And you spoke about rural India and agriculture being a little bit of a green shoot in the middle of what is a truly grim picture. I think one thing we haven't really talked about is how much of an income shock health can be to most of India. 50% of India is vulnerable. Health gets you below the poverty line immediately, and
That's
currently okay, so if you look at data on regular health issues, immunization, for instance, maternal deliveries in institutions, all of those have taken a massive hit. I think that not only has much of India lost jobs, and even though now rural India is picking up with Narega, etc., we are very vulnerable to health shocks that will make people moving back into poverty more, which adds to the case for more cash in people's hands, more to Narega, more cash transfers, and so on.
All right. Nilesha, why is the government not spending more? I mean, we really are in a crisis. Either you borrow or you print cash, whatever, but don't you think this is the time to just really spend more?
As Praveen mentioned, we are today constrained by what rating agencies will think. My solution will be slightly different. In last 21 years of this century, we have spent $376 billion officially for net import of gold. If we take into account gold smuggling and travelers who wear jewelry and come back to India, this number could be upwards of $500 billion. We all know most of this gold is in tijori, in black account, rather than in white account. If government can come out with a gold amnesty scheme, where RBI buys gold at a discounted price, that will help them expand their balance sheet. And if they give cash against buying of gold, no rating agencies can dare downgrade our rating. This money transferred to government will provide revenue or taxation to them to spend money. And most important is that this money in the hands of entrepreneurs and businessmen will be equity in their balance sheet, which can be suitably leveraged by our banking system. This is how you create taxation for government, equity for business, expansion of balance sheet for RBI without touching our rating. Such kind of innovation will fuel economic growth.
But may I ask, if I may, are you able to make these suggestions? I mean, is the Prime Minister's Economic Advisory Council meeting these days? When's the last time you had a meeting, if I may ask?
We had the meeting last month only. And such suggestions we do share. Obviously, we are only advisory in approach.
Fair enough. One of the things I'll try and see if I can get a response to your gold amnesty scheme from some of the other panelists. But Mahesh Vyas, the other thing that we've not spoken about is jobs. That's something that CMIE tracks. Your data has again captured the fact that there's been a collapse of jobs, which is in some ways understandable because during a lockdown everything shuts down. Subsequently, it did show that the numbers are picking up, but is it still overall fairly grim?
The unemployment rate has recovered. So we had 7.5% unemployment that went up to 23, 24% and even touched 29% in between. But in the month of July, we are down back to around 7.5%. But we still have a large shortfall on labor participation rate. So we have a labor participation rate today of around 40.7%, which is 2 percentage points lower than the 42.7% we had before the shutdown. And therefore, the actual number of people who are working, who are employed, is still 2% short of what it was before the lockdown. So we have still got a long way to go before we recover. But there's another problem, which we found in July, that a large part of the repairing of the jobs has been of informal workers, whereas salaried employees are increasingly losing jobs even now. So in April, we estimated that 17.7 million salaried jobs were lost. That number now is 18.6 million jobs lost in the salaried category, while other jobs have all come back. So I think we are seeing a deterioration in the quality of people left in employment. Good quality jobs are falling.
That's quite worrying. Praveen, very quickly, as we start to wrap, because really the situation, though, I don't know if you had a chance to address this, the problem is that what we are trying to do is just, because there's a difference between a stimulus, which actually kickstarts the economy and gets things going, and the other is that you just keep people alive, like economically alive, while there's a lockdown. So, given the fact that we are still not able to fully unlock down, should all the focus just be on, quote unquote, keeping people and businesses alive?
Yeah, in fact, I couldn't complete the 3 steps that were advocated in that piece by Dr. Manmohan Singh and me, which was the first step was confidence in people through a direct cash transfer. The second is for businesses through a credit guarantee. See, I want to step back and say that, a lot of the ideas, including gold or the expenditure idea, are good ideas. I think we have to first understand if this is the right time to do it, because as you rightly said, we have to survive. A negative GDP contraction is not just for a number for economists. It actually means for the first time in independent India's history, there will be more people who will fall below the poverty line. More people will become poorer. I mean, these are extraordinary turn of events. So this is, so I worry that we may be trying too much. So all we are saying is do 3 simple things. Put money in the hands of people, give credit guarantee schemes for businesses so they have access to money, if they have access to demand, customers, if they have access to money, and let the banks run. Don't intervene with the banks, don't witch hunt bankers, let them lend. If we just do these 3, I think we will be able to survive.
Okay.
Please remember, a negative 10% GDP growth this year, even if we bounce back 10% next year, still means we are only back to what we were last year.
Okay.
So we have to be very careful and we have to survive this first.
Right. Yamini, do you get a sense that the government is actively seized of this kind of spiral we are with the economy? Because there was a burst of activity somewhat towards the early parts of the lockdown, but now we're not seeing or hearing very much.
I mean, look, they can't be blind to it. It's just staring you in the face. So I certainly think they're well aware of the opportunity of the crisis and how badly we are spiraling. I think the problem is that they still can't make up their minds what they want to do. That's a very difficult and dangerous place to be. Particularly, there seems to be an unwillingness to be really risky, which is the only option we have, and spend in ways that all of us have said. Nothing that all your panelists, including myself, have said is not known to government, has not been part of the public discourse, or is not basically commonsensical things. We just need to act.
Right. Action is the key word. But Nilesha, one thing that we pointed out, that on the lending side of the banks, that despite all these huge attempts, moratorium and, loan guarantees and all that, lending is just not taking off. So that's just one big bottleneck.
Undoubtedly, lending by bankers have slowed down. And partly this is because activity levels have come down, which has reduced working capital.
Right.
A part might be related to banks' decision-making process. And clearly there is a need for credit guarantee scheme, which we have announced for MSME sector for about 3 lakh crore.
Yes.
And for NBFC sector for about 50,000 crore.
Yeah, but despite that, it doesn't seem very encouraging.
From the lower levels in the month of May, July numbers have improved marginally.
Okay.
But this trend has to continue further as we move from slow season to busy season, which is typically the festival season from here till Christmas.
Okay. Well, let's keep our fingers crossed and see how it unfolds. We'll be tracking that story very closely on NDTV. We're completely out of time. Thank you all so much for joining us on Reality Check. Thanks so much for watching. That's all the time we have. Good night.